Capitol Report is a production of Senate Media Services.
Recently released health insurance rates come in lowest in the country, and the legislature provides disaster relief in short order. We have those topics and more in this week's Capitol Report. Hello, everybody, and welcome to this week's Capitol Report. I'm Julie Bartkey. The rates for MNSure, the online health insurance marketplace, were recently announced, and Minnesota came in lowest of the 11 states that recently released their rates.
Remember, these are 2014 rates and products that will be available starting October 1 for purchase, that will be effective on January 1, 2014. And the rest of the market products for January 1, 2014 are still in the Department of Commerce under review for approval for any product that's outside the market, outside the MNSure market.
There are individual premium tax credits, and those are available to people that make less than 400% of the federal poverty level. And there's a chart in the packet in there that kind of explains what that is. But as an example, for a family of 4, that's about $94,000. So as long as that family of 4 doesn't have access to affordable employer-based coverage, they can access the tax credits to make their coverage more affordable. So that's on the individual side. There are also small employer tax credits that are also only available through MNSure. And small businesses that have 25 or less employees and have an average wage of $50,000 or less for those employees, they are also eligible for tax credits. And that tax credit can be substantial. It can be worth up to 50% of the employer-paid portion of that premium.
Joining me now is Representative Joe Atkins to talk a little bit more about what these MNSure rates really mean to Minnesotans. Thanks for joining us. We appreciate your time.
My pleasure to be here.
So let's begin with the MNSure rates that were recently released. One of the states, we are, of all of the states that recently released their rates, ours did come in as essentially the lowest. So, when we interviewed you a few months ago on Capitol Report, you said, of course, you predicted that opening up the market would drive down costs. So what was your reaction? How would you grade the rates that were released?
Well, I wish I could say it was some big surprise, but I mean, this is really what competition does. It drives down prices and it drives up quality. And so I was hopeful that we'd see low rates. And they weren't essentially the lowest rates. They are the lowest rates by a pretty wide margin compared to most of the states that have filed their rates.
And yet there's still some Republican pushback on this. One person, Representative Joe Hoppe, stated after Friday's release, "Today we learned many hardworking Minnesotans will be forced to pay more for health insurance under the exchange than they do on the private market here in Minnesota. How does making health insurance more expensive encourage more people to get insured?" What are your thoughts to those comments?
Well, unfortunately, I don't understand them. These are the lowest rates in the country. There's no asterisk, there's no caveats. They're the lowest rates that have been filed anywhere in the country. And so I'm not quite sure what Representative Hoppe meant by that, but it's good coverage, in some cases great coverage, at the most competitive rates anywhere in the nation.
And I was reading that comparing it to the private market is kind of like comparing apples to oranges. How is that? And do you think these rates really do compare with what's out there in the private market?
Well, you got to keep in mind that as of 2014 now, none of these insurers can turn somebody away because they had a pre-existing condition. And so you've got, and the only factors that they can take into account are things like age and whether you smoke. So it's a little difficult to compare. Right now, you apply for health coverage, you can be turned down for any number of reasons. And these plans, you're guaranteed to get coverage, and you're guaranteed to get it at a very affordable rate. In fact, I think one was lower than $91 a month. That's really good coverage at a really good price.
So, Representative, what's your reaction to news that companies like IBM in particular, it plans to move its retirees off company-based insurance and onto the exchange? Should taxpayers, in your opinion, be concerned at all that we might be picking up the tab for things that were normally paid for by private companies?
And I'm so glad you brought that up, because all we're doing is serving as the market. We're like Target. We're just putting things on the shelves. The products themselves are still sold by Blue Cross Blue Shield or by Health Partners or by Medica or one of the other carriers that provide the coverage. We just provide the market to bring that healthy amount of competition. So to the extent that IBM or anybody else wants to have folks shop for coverage, they'll have that opportunity. But it's not government-issued coverage. It's not government-run coverage. It's just a good, healthy marketplace, a vibrant marketplace.
And we were talking, we essentially talked about an employer who's making this decision. What about an employee who might want to opt out of employer-based health care, who finds a better deal on the exchange? Are they kind of designed, or do you think that it might be one of the benefits that they're going to compete against one another, the private and the public marketplace?
I think, Julie, that's the whole point, is to have competition, and that competition, regardless of what you're shopping for. In this case, it's, health insurance is kind of complicated for a lot of folks, and it's kind of frustrating too. But hopefully this will, in a very straightforward way, enable consumers to kind of level the playing field with the sellers of the product. Get a good product that they're shopping for, and one that fits their budget, and a high quality one at that.
And now the exchange launches in less than a month. How is the outreach going thus far? What's your opinion?
Paul Bunyan is making some real headway, I think. I mean, I was a little, I didn't quite know what to make of that. It's sort of farcical, but the number of folks talking about health insurance as a result of this Paul Bunyan outreach effort, I think is remarkable. It seems to be going really, really well, and I think I'd imagine we'll find out later today. Actually, we've got an oversight hearing from MNSure, what sort of numbers are being driven to their call center and to their webpage. But I think it's going to be significant.
And there was an article in the St. Paul Legal Ledger recently that the Stair Strip Foundation intends to, quote, raise holy hell about the fact that it doesn't see that there's anybody doing outreach. No group was selected that specifically targets African Americans. Do you think that's valid, or do you think that there were some groups selected that can target that audience?
Well, I think there's two things. Number one is that the final selections haven't all occurred yet. My understanding from the folks at MNSure at the Health Insurance Exchange is that they're still going through the outreach efforts. So I don't know whether or not Stair Step in particular or any other organization is going to be on the final list or not. And in addition to that, I think and I would hope that all of the organizations that have made it through the process thus far would be not reaching out specifically based on color, but to reaching out to all Minnesotans and hopefully spreading that word to everybody that could benefit from a competitive place to buy your health insurance.
Another demographic that tends to not buy into health insurance is essentially young, healthy people. How do you get them to sign on?
You're describing my sons. I was actually having this conversation. They're not quite beyond where they would lose their coverage through me. They're in their early 20s. One's 20, one's 19. But it's something that, they're all immortal, so they don't really think about it too much. But I think as they get to be into their mid-20s, it's one of those sorts of things you should have. A long time ago when I was in my mid-20s, it was something that it was really a question of could I afford it? And at this point, with $90 a month, or perhaps, and that's before the tax subsidy, or the tax credit from the feds. If you could get coverage at a modest rate, perhaps less than half of what you pay for your cell phone each month or what you pay for your cable bill, I think you're much more likely to buy it than if you can't get it at a reasonable price.
One last question. Could you grade these rates? Graded A through F. What grade would you give the rates that were released?
When you're number one, how do you give it anything but an A?
All right, with those words, Representative Joe Atkins, thank you for coming in and talking with us. We appreciate your time, as always.
You bet.
Lawmakers had an opportunity to receive an update on the launch of the MNSure website, and it was the outreach and marketing campaign that drew questions about strategy and whether the MNSure message would reach all audiences.
I anxiously waited to see what our marketing strategy was going to be, and I think we all saw Paul Bunyan and Babe the Big Blue Ox, and I think it was a well-done ad, and people kind of remembered it. But I do distinctly know that a lot of people in the communities that I represent didn't know who Paul Bunyan was, didn't know who Babe the Big Blue Ox was. And so, I happened to grow up and went to kindergarten in South Minneapolis in the early 70s. I guess I'm telling my age now. So I was familiar with them. But a lot of people that live in my community didn't grow up here, are new immigrants, are new to Minnesota. And so I guess my question beyond critiquing if I thought it was the right message is, are there other kind of messages, are there other creative content that are going to go out that go to people maybe that are new to Minnesota, maybe they're immigrants, maybe they didn't grow up here, maybe they they just don't identify with a 27-foot tall, large white guy with a beard and its companion, the ox.
To your point, the ads that we tested, the Paul Bunyan one by far tested far and wide the best among all the populations, even among those who might be new to Minnesota that didn't quite know who Paul and Babe were. The message that was carried through that resonated with them. That said, Paul and Babe is not the entirety of the marketing and the public outreach messages that are there. We also have specific targeted messages in different parts of the state and with different populations, both through newspapers, community radio, community TV as well planned, that are more targeted towards specific populations in specific languages to get that word out. And so Paul and Babe definitely is the kind of the mass media, but there are also targeted strategies that are planned as well.
Senator Sean Nienow joins me now to talk about his impressions of the MNSure rates that were recently released. Thanks for joining us. We appreciate your time.
Well, glad to be here anytime.
So, Senator, let's begin with that question. If you were to grade the rates, give them a grade A to F, based off of what you heard last Friday here in Minnesota, what grade would you give them?
Well, you know, it's a complicated question. It seems so simple, but it's not, because compared to some of the other metropolitan areas, and the rates that were released were just metropolitan areas. I asked them for statewide numbers, and I'm hoping to get those soon. But relative to other states, they were pretty low. But the problem is, relative to what you can buy today on the open market, they're pretty high. So do you want to grade them relative to what everyone else is doing? That's pretty good. Or do you want to grade them relative to what you could get today? That's pretty bad. So it depends on the context in which you give that rate. For example, a 25-year-old, the best rate they can get is about 40–50% higher in the exchange than you can get for a comparable product in the market today. So you know, how do you want to measure that? It's either an A or an F. I don't know what you want to give it.
But is that the truth for across the board? And I know, for example, some people pay, teachers in particular here in the metro area, for some districts, they pay really high family plans, $1,400 a month for a family plan. For somebody like that, do you think the exchange might be a viable option?
Well,
Or
maybe.
is it apples and oranges, as some
It's
people
really
claim?
going to be. It's really going to be contingent on the individual circumstance. The rates overall, on average, are going to be more expensive. That, I think, everyone would acknowledge is a fact compared to what you can get today on the open market. But those rates are very often, if you qualify, are going to be bought down with taxpayer subsidies. Now, we're all paying for that, but for you, getting the subsidy might be a good deal. And so it really depends on the individual circumstance.
Okay, let's move on to your reaction when you hear that companies like IBM in particular, they plan to move retirees off of the company.
100,000 people, yes.
Exactly. So do you think the exchange is kind of, should taxpayers, in your opinion, be concerned that they might be picking up the tab for something that was employer-based, that's something the employer paid for in the past?
Oh, that's absolutely going to happen. Employers, businesses, this is what they do. They do spreadsheets, they look at the bottom line, and they say, how much is this going to cost or save? And when it comes to employees, just because it saves money, they might not do it because they want to do right by their employees and keep them. But depending on the cost-benefit analysis, they might shift and shift that cost, and businesses are absolutely doing that. You saw that with IBM, you saw that with, I forget, there's an airline that shifted thousands and thousands of employees. They said, you know what, it's going to cost us lots of money, we're going to stop doing this. It's going to happen all across the industry, not all the industries, across the market, and businesses are going to look at what is the best deal for us and what is the best deal for our employees and balance those. And you're seeing a lot of those companies are shifting off, or they're giving a one-time payment saying, here's some money, go into the exchange and go buy your insurance and get a taxpayer subsidy. And you and I are going to pay for that when that happens.
So let me ask you this, based off of these last couple of questions, just do you think that having this exchange provides more competition in this marketplace? And therefore, isn't that a better deal for consumers to have more options? It typically is the Republican mantra of opening up the market.
If the question is, does the exchange create more competition? No, it's out there right now today. Actually, you can go to Esurance, and go plug in and who's going to offer me this, that, and the other thing. In Minnesota, one of the challenges we have that limits competition is the fact that we do not allow for-profit companies to offer insurance, health insurance, in the state of Minnesota. And one of the largest insurance companies in the country, one of the fastest growing insurance companies in the country, is based in Minnesota, but they can't sell here because they are not nonprofit. And for the consumer, it's not about whether you make money or not, it's about whether I get the best value and the best price. If you can make $1 on that, good for me, good for you. But in Minnesota, we don't allow that.
So let's go back to the rate question a little bit. Do you think forcing young people, young, healthy people, to join the exchange, do you think that that might help reduce the rates in the long term?
Well, yes, the premise of Obamacare, the Affordable Care Act, is that everybody will be required, forced to purchase insurance, or if they don't, to pay a tax, a penalty, depending on what you want to call it. The Supreme Court called it a tax, which makes it constitutional. But the problem is that particularly in the early years, so in the first year, the maximum penalty someone will pay is about $100, well, or 1% of your income, maybe a couple $100. But for a young person not making a lot of money, $100 is your penalty, compared to $2,000, $3,000, $4,000 a year in insurance premium. Well, if you're a 26-year-old who knows I'm probably not really going to get sick. I mean, how many of us really got seriously sick when we were 26-year-old? Not many of us. So if they opt out, we're not getting those premiums, and the young people will be subsidizing the old people who get sick or have babies or whatever. They've got families, they've got kids, they get vaccinations, they get checkups. They use the healthcare system. The young people don't. And if they opt out, you could run into what a number of studies have called a death spiral. If the young people are not getting into the system and paying those premiums, but not using the healthcare system, then the premiums are going to go up, and you have more people opting out, the premiums will go up, and more people opt out. And that's the potential death spiral that has been identified, and that's potentially the Achilles heel of the Obamacare system.
And that's projecting into the future, so I want to ask you a different perspective on it. Steve Parente, who's a healthcare economist and professor at the U of M's Carlson School of Business, he believes actually that the MNSure has a healthy level of competition. And he was quoted saying that the real test is 3 years out. That's when you'll see if this thing is really bulletproof with high levels of competition and good rates. So if you were to project 3 years out, what do you think has to happen for it to be something that you would buy into?
Well, for me to buy into it, we would have an actual market competition, free market system. Now, we started out with not much of that to begin with, and now that we've got Obamacare and the exchange, even less of that. But I would agree with them. It's going to take a few years, and we're going to find out, is this thing going to pass or fail? It's either going to work or the whole thing's going to implode, and that will take a couple, 3 years. I talked about earlier in response to your question about a potential death spiral. That could take a couple of years if that occurs. And what it's going to take for this to succeed is for those younger people to not opt out and to pay those premiums but not get the health care because they don't use it. When you're 21, 22, 26, you don't use health care. You're young, you're healthy, but we need you to pay the premiums to essentially subsidize the 60-year-old, the people that are getting mammograms and colonoscopies and immunization for the young kids and all of that kind of stuff that comes along with getting older.
Senator, you're pretty black or white about whether it's going to pass or fail. Do you think that there's some wiggle room? Are there things, modifications that could be made so that maybe this is the start of something that could work? Or do you just think it's an idea that just isn't going to?
I think the potential was there before this federal law was passed and signed into law. I think the potential was there to find some middle ground, and you and I talked about this off the air, where there are things that people agree, the pre-existing conditions. We could account for that. We could figure that out. We could build that into the underlying cost and reduce those pinch points. But the way the system is set up right now, I liken it to a fork in the road. We're either going to go completely down this way and government is going to take over healthcare, or the whole thing is going to collapse and we're going to go back to a free market. Which way does that end up? I'm not sure yet.
Okay, with those words, Senator Sean Nienow, thank you again for joining us. We always appreciate having you on the set.
Anytime, thank you.
In roughly 4 hours, the Minnesota legislature processed and passed a bill allocating $4.7 million in disaster relief.
Oftentimes we believe that we come and we approve these and then we have picked up the 25% state and local share, and that somehow we have now made our communities whole. And I want to assure people that that is not the case. In the instance of the ice storms which hit my area this spring, and we saw massive damage occur to many different areas, particularly the trees. And we assume that because FEMA comes in and we approve the 25%, that therefore we've got everything covered. And yet, for example, the city of Worthington has over $900,000 of costs that are not covered by the FEMA rules and or the state rules. We can go in and trim the branches that have actually broken, but we can't, if the tree is so badly mangled it has to be taken down. We can't pay for that. We can't pay for the stump removal. We can't pay for the tree replacement.
This isn't a major disaster. Last year we saw a much bigger bill, a much bigger need. But even small disasters in communities are important where they happened. And so it's nice to see the state step up, handle this issue. The directors of emergency management at our state have been working very well in getting on top of these issues, and we'll continue to do that to make sure this money flows out.
We're here once again, and I've had the occasion, I think, on maybe 3 or 4 times to be at a session like this, a special session called for disaster relief. And that is good. I congratulate the governor and the leaders for putting this bill together. It's an important bill for many counties, 18 counties I think it is, that have suffered through some level of natural disaster, in which once again Minnesota in its true traditions comes together collectively as a state and says we're going to help you, because this was unforeseen. The resources typically aren't there in these communities, and so we're here now to help you as one body, Republicans and Democrats, and that's certainly a good thing.
The constitutionality of the Minnesota Sex Offender Treatment Program is under fire. We recently sat down with the Department of Human Services Commissioner, Lucinda Jesson, to discuss the issue and the future direction of the program. There is a class action lawsuit to the state of Minnesota Department of Human Services, specifically talking about questioning the constitutionality of the state's sex offender treatment program. Why is it an issue?
Well, I think we have a number of different groups looking at the program and saying, how can we do a better job? The litigation itself is saying that they believe that the program is unconstitutional in its treatment, and particularly focused on the fact that there have been so few provisional discharges. But we also have a separate task force looking at the program and saying and recommending changes that would require legislative approval. And I think at the department level, we also are looking at saying, what changes do we need to make to improve this program, which does need change. We've started down that road, and we have further to go.
According to an August 29th article in the St. Paul Legal Ledger, nearly 700 people are involuntarily detained at Moose Lake and the St. Peter facilities. This class action lawsuit that you referred to was filed 3 years ago. It's asking for several changes. What do you think some of those key changes need to be? What are you hearing from the task force thus far?
Well, let me talk about some changes that I think need to be made. Some of them are picked up in the litigation, but some of them are just my own assessment about what needs to be done. I do think we need more frequent assessments or risk assessments of the people who are there, so we can make sure that they're in the right part of the treatment. And if they aren't and they need to be moved elsewhere, that we make those changes. That was part of the legislative proposal last session. I think we need to have options for judges when they commit people, so that the only option isn't the most expensive option behind the razor wire. And that once again, I think that was something that was part of the legislation that passed the Senate but didn't pass the House last session. So those are two of the things that I think we need to do. Internally, I think also we need to speed up the process so that when someone petitions for a provisional discharge or just a change in their, to move to a less restrictive setting, that we handle those petitions more quickly.
Has there been any discussion, lengthy discussion, on how it is that the state got to where it is, where virtually nobody, quote, gets out?
Well, I would just like to point out that we do have, you know, there was a provisional discharge, successful last year. That individual is living in the community. We have, I believe, about 2 more that are coming up to the courts, because remember, the courts have to say that someone can be provisionally discharged. I can't just do this as commissioner, but we have 2 more people up that the treatment team supports for provisional discharge, and we have a lot more people in our final phase of treatment, twice as many as we did 2 years ago. So I think we're starting to see people progress through, but it needs to be a careful, thoughtful process. These are not decisions that anyone should rush into.
Is there any concern that if the standard for release becomes, and this is a quote from the article, much less stringent as requested in the court order, do you think public safety could be at risk?
Well, it depends what much less stringent is. But that is clearly a question for the legislature. You know, the standard is in law. You know, it's being challenged, so a court could look at it and make a different decision about it. But I think Senator Bach was right, and that we need to look at this program and what changes need to be made.
And given that, how do you move forward with this? What is your timeline? Is there a sense of kind of expediency here, or does it need to be perhaps even more thoughtful and deliberative than what's typical?
These are serious decisions, whether to commit someone to begin with or whether to provisionally discharge an individual. And so I do think those need to be deliberate decisions. Any changes to this program should be thought through very carefully. But I think there are some things, while there's some things that the legislature needs to do to make changes, there's some things that as commissioner I can do to improve the program. And you know, we are taking steps, thoughtful steps down that road, issuing an RFP so that we know who we could contract with for less restrictive options, speeding up this SRB process, which is this internal review board, having more assessments on a regular basis. Those are steps that, you know, I can take as commissioner, and I think are very appropriate ones to reform the program.
Commissioner, so how do you navigate this through the legislature, and is there a concern that if the legislature does not take appropriate action, that the federal government might come in and take this entire sex offender treatment program and run it itself?
Well, that certainly the program is being questioned before a federal judge. So, you know, there are certainly people who would advocate that the judge do that. I believe that particularly with the reforms we're making, the program is constitutional. I think that we can continue to improve it, and I want to work with the legislature to do that.
Okay, Commissioner Lucinda, Jesson, thanks for coming in and discussing this very important topic with us. We appreciate it.
Thank you.
It's now easier to stay in touch with activity at the state capitol. Senate Media Services is on Facebook, YouTube, and Twitter. Find the links on our homepage. So follow us and follow the Senate.
That concludes this week's program. From all of us at Senate Media Services, I'm Julie Bartkey. Thank you for watching Capitol Report.